It's about that time of day again. My name is Joseph. Thursday evening, October 11th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bearish with a spike and channel pattern. So of course, we're looking for selling opportunities, but we want to use those two try failure patterns up near the highs of that channel tomorrow. The S&P is bullish as it rotates off the low of today's trading range, and I have my eyes on a key support trend line for buying opportunities tomorrow morning. Nasdaq is also bullish, also with a trading range of its own. That tells me to look for buying opportunities with those seller failures down at those lows tomorrow. Gold is bullish with a spike in channel of its own tonight, and that tells me to look for buying opportunities using bear traps below those prior swings. And of course, we can't forget about the euro. The euro is bullish with a spike and range pattern tonight, and that tells me to look for buying opportunities using those seller failure patterns just below the low of the range. Got a great looking chart for all you euro traders, so stay tuned for that chart later on in tonight's video. Well, we're getting ready to wrap up what has been a crazy week of trading, been a great week in our trade room, been a great week on this nightly newsletter. We're ready to go into Friday morning here with a bang. We've got some strong trends, some trading ranges, and as always, a solid plan of attack to find the best of the best opportunities, right, for tomorrow's trading session. Before we jump into the charts and put this plan together here tonight, though, I got to remind you, if you're watching me this evening on YouTube, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. I'll leave all the links in the description of the YouTube video. Also, if you have any questions about anything covered in tonight's video, please remember you can post them in the comment section below. And don't forget, if you like what you see, please help support this channel by subscribing. And don't forget, when you do that, make sure you hit that bell icon so you're notified every time I post another video. And also don't forget, if your goal is to become a consistently profitable trader, you can get that transformation started right here on our blog homepage. Join our mailing list and never miss another great video. Also, don't forget, you can download all the charts from tonight's video. They're located, there's a link in the description of the YouTube channel, right? And there's also, of course, all the charts are linked up below the video. And if you have any questions, we have live support. We got a toll-free phone number in the upper right-hand corner. If you need any help along the way, hit me up right on live support or call the toll-free number. Looking good, guys. Hope you guys had a great day out there. But as always, we're only as good as our next trade. Let's get ready for tomorrow. Tomorrow's Friday, October the 12th. Missed that Friday the 13th by one day here this month of October. Lucky us, I guess, right? Lucky us, I guess. But looking at tomorrow's news, there's no major news on the schedule for tomorrow. We get some minor stuff at 8:30 and 10 a.m. Eastern time. So no major news to really light the fuse here for us. The one thing, though, that I'm thinking for tomorrow is probably going to be a little bit of a quiet session. It's been a real volatile week. There's been a lot of action back and forth. I would imagine tomorrow has the potential to be a relatively quiet trading session, as I'm sure there are a lot of traders who got really beat up, or as you saw in the last two trading sessions, high amounts of volume. I'm sure a lot of traders are exhausted after being at their desks, right, for such long hours this week. So my gut tells me tomorrow's probably going to be a relatively small window of opportunity. You know, my plan is always come out every morning. I trade every morning from 8 a.m. right to 11 a.m. Eastern time in my trade room. My plan is always come out, see what I get. You never know what you're going to get, and the last thing I want to do is have any, preconceived opinions of what's happening, right? So open mind tomorrow, fill with opportunity, but I'm not going to be surprised if we see less than your typical price action, right, for a Friday. So Friday mornings, they're always early in, early out. We don't expect to see that big of a window, but again, tomorrow I'll be watching trades in our trade room from 8 o'clock to 11 o'clock Eastern time. So no major news tomorrow. Keep your eyes on the time, early in, early out. And again, with tomorrow being the Friday after a holiday weekend, the Friday after all this craziness, right, in the financial markets, I won't be surprised if we see a relatively small window. Nonetheless, though, you know where to find me tomorrow morning, 8 o'clock Eastern time, right? And we're going to be taking advantage of whatever, right, this market gives us. Let's jump into some charts here tonight. We got crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on the euro. Crude is bearish with a trading range, a spike in channel, and a measured move on the chart this evening. Now, the momentum is clearly bearish right now with price coming off of the low of this channel, right? My plan is to look for selling opportunities, right, at levels of resistance. And so with this market being a bear market, we know momentum is bearish, I'm looking for levels of resistance to sell at. I've got levels of resistance on the high of that channel. I've got this little swing here at 71.35, and of course the underbelly, right, of that range at 71.81. So looking for selling opportunities off the high of the channel, right, off the underbelly of that range. That's basically where we're looking for the most reliable selling opportunities tomorrow. At the same time, though, I'm also watching this momentum as we push higher, looking for signs of a short covering rally that will likely drag price back into the range where this whole party started. You know, you'll notice if I double up this range, if we go one down and then another one, you'll see we are right there, right? We are right there at that double range expansion. Now, normally, if we can break free of this first range expansion, we'll talk more about range expansions in a moment, but typically though, right, if we can break free of that first range expansion, usually that's enough to drag that momentum lower, right, and give the sellers a chance to sell at resistance. But it's way too convenient, though. You'll notice they push through the measured move and literally almost to the tick, right, getting that range expansion level tested. So the pendulum swing is definitely in play right now, right? There definitely is potential that we could have this thing swing down, right? Have it swing down, and then of course have it swing all the way back up again. So there's definitely potential here, right, for this oil to really make a run. You'll notice that pendulum swing puts us all the way back up, pretty much at where we finished the session, right, on Wednesday evening. So here we are now. We're coming into Thursday night. We have that bear market, right? We're looking for some sells up at a level, right, of resistance, and keep my eyes out if this market turns bullish. Now, let's talk about the bear side first. As we go back to the high of this channel, let's zoom in a little bit closer here. As we go back to the high of this channel, what you're really looking for here is one of these types of patterns. You'll notice these happen all the time. We call these two-try failure patterns. Whenever we go back to the high of a channel, we're usually going to be up above that moving average. So you'll notice every time we go above the moving average, the buyers try to buy the pullback and they fail. We go above the moving average, the buyers try to buy the pullback, they fail. We go above the moving average, you guessed it, right? Buyers try to buy the pullback and it fails. So that is, right, history often repeats itself, and we're going to see if we can do more of that tomorrow. So as we go up, I'm looking for that moving average to come over, and I'll look for exactly the same pattern, right, that two-try failure pattern to send this price back down to retest those channel lows. And of course from there, right, we'll look for another measured move, right? So one leg down, two legs down, right? That will be our next measured move down. So take that leg lower, right, and it will project lower, right, down to that next measured move target. Now, another thing to keep in mind too is if this market turns bullish. Now, what would a bull market look like here? Well, a bull market will jump off of that moving average, right? It's pretty simple, right? So if we see the market now as it goes higher here, buyers try to buy it, they fail, we're going to sell, right, into that failure because the overall momentum is bearish. But if they hold that pullback now, right, if we see these buyers jump off of that moving average, well, now the writing's on the wall. Now we've got too much bullish momentum, right? We call this the 1, 2, 3 reversal, right? Meaning the fact that it's got 1, 2, 3, right? So it's got 1 is a strong move back above the moving average, 2 is a pullback to the moving average, and 3 is that strong move off the moving average. If we can get that 1, 2, 3 reversal, well, now the writing's on the wall. We know we're trying to go back into that range. So in that case, we want to start looking for levels of support. Now, where would support be? Well, support would be back at the moving average. Support will also be the high of that prior swing. And then I can find some hidden support by drawing a trend line off the high and bringing it down off that low. And we can look to buy, right, as the market rolls higher. So once again, there really are 2 basic strategies here right now. One is going to be the bear strategy, which is that up 1 try, 2 try, and back down. 2 is going to be, can that pullback hold and run? If it does, mark up that swing, that becomes support. Mark up that channel, that becomes support. And now really we're looking for a buy inside of this little area right there, right? Between that, the low of that channel and that support level, right? To be a buyer as we go higher. You're going to want to be careful buying into the high of that range, right? That will be a level of resistance. So what you really want to do at that point is try to get through that level of resistance, get that moving average up, and then use that, what was resistance, use it as support, right? And then look to buy those pullbacks from there as we try to complete that big pendulum swing. Now, also don't forget for the bears, if we do end up back down to that low and we bounce off of that low, you're going to see a bunch of examples of that tonight. We got a couple spike and range patterns on gold and euro. But watch out for that double bottom as we retest the low. If that happens, then we know we have a trading range. And if we have a trading range, we then know we're looking for those selling opportunities, 1 try, 2 try to sell back down again. So keep an eye on that trading range. If we do see it collapse back lower, watch that double bottom. If we get that double bottom, we then know it's a range. And we're basically looking for, right, the same type of pattern, except now it's going to be the 1 try, the 2 try, and then we're looking for that proper signal, right? And that signal candle, right, will be your trigger to get in. And the target, of course, is back down to retest that low. So we've talked about the bears. We've talked about the bulls. We've talked about a trading range along with that trend. That pretty much covers everything here tonight. Now, if you're here for the first time today, I'm sure a lot of what is talked about might go right over your shoulder. 2 try rules, right? 1, 2, 3 reversals, trading ranges, and signal candles. So let's do this. If you're here for the first time today, I want to teach you a whole lot more of this strategy, because not only do I want you to be successful, but I want you to be prepared when you come out and join me every morning in our trade room. So if you want a great kind of kickstart, right, to make sure you get the most out of this, I've got a great free trading course in the upper right-hand corner. You'll see a pop-up here come across the screen. I'm also going to link it up in the description of the YouTube video, along with, if you're on the blog, it'll be linked up right below the video on the blog as well. Grab that free trading course and learn more about all my favorite patterns, all the tools that we use. Get ready for joining me in our trade room, or just use that information and all those examples of our favorite patterns, right, to really help out your own trading. Not to worry, pause the video, grab that trading course right now, right, and I'll see you on the inside of that video series. Trust me, it'll be a great use of your time. So crude looking good here for tomorrow. We're bearish, but I'll tell you, there's definitely some potential this market could turn bullish here tomorrow. Speaking of a market that's bearish and turning bullish, how about the S&P? S&P is bullish with a trading range, support trend line, and a measured move on the chart this evening. The bears clearly have the long-term momentum, right? I mean, hopefully your memory isn't that bad, right? Hopefully that short-term memory, right, hasn't completely been lost. We had that big bloodbath down yesterday, right? So we got that huge long-term bear momentum right now. But with this recent rejection, strong move down, trying once, trying twice, and seeing it jump off that low. After seeing these bears try twice, we'll call that rejection off those range lows. You can even see how we took that trading range, projected it down, that range expansion holding like a gem, right? So we can see that trading or that range support level they're holding. We know now, right, these sellers are on the wrong side. We know now this market is most likely going to try to return back up into that range. We get a huge pendulum swing down. We could be looking at a monster short covering rally up to targets at 28.19. I've got levels overhead at the measured move, right, at that range expansion. And then, of course, that pendulum swing being the cherry on top here for the bulls. So rejecting off the range lows, we can expect short-term momentum now to run these prices back up right into that short-term trading range. And knowing this, now I'm looking to be a buyer. When I want to be a buyer, I want to buy at support levels. So where are some support levels I can use right with my entry patterns? I got a rising support trend line. I have my range support line here at 27, right, 30, 27, 29. This whole area now is really a desirable spot, right, to look for some buying opportunities. So now all I'm going to do is going to pull back, right? I got to find some way to enter, right, as we're going higher. I don't want to buy now because I'm buying right into the low of that range. I'm not buying at support. So here are a couple options that I'm looking for here tomorrow. First of all, I'd love to see us pull back. And if we can get a pullback, it'll be below the moving average. If I can get this price below the moving average, then we can ultimately look for the same basic pattern we saw here, which is the run down, the sell at the moving average, the failure, right, and that run higher, right? We call these two-try failure patterns. So strong move down, right, get into that support area, let these sellers now try to sell off that moving average. This is what we call it the one-try, two-try pattern, right? The two-try failure. Now, once we see those sellers selling off the moving average, now I know where their stops are. Now I know where the pain starts for those sellers, right? That little bit of information is critical because now I can buy into those stops. Not only can I buy off the two-try failure, but I can also now look for, I can use that as support. I can find another support off a hidden channel, and we can buy off that hidden channel pullback as well. So there are two big opportunities if we can get that pullback below the moving average tomorrow. I've got that two-try failure below the moving average, and then I've got that hidden channel pullback pattern. Both of these patterns, by the way, are covered in tremendous detail in that free trading class, which again is linked up in the upper right-hand corner as well as below the video tonight on the blog. So make sure you grab that. Now, what if we go higher here? What's the plan then? Well, there's really two scenarios that you're looking for here right now. One would be an aggressive, shallow pullback move higher. If we see an aggressive move higher, I've got to get aggressive with it because it's going to be a short covering rally. And as we talked about last night on gold, we saw how aggressive short covering rallies can get. If we see it really jump higher here now, what I'm going to do is I'm going to mark up all these prior swings and simply look for a trap, right? A trap setup, what we call a bear trap pattern. Right? So again, if it's aggressive up here, look for that trap low, right, and get it before we get up to that measured move, right? Now, what is also potential is we run back up to like retest this little guy right here and then go sideways, right? Nobody wants to buy high. Everybody's kind of worried about this, this big long-term trend being down right now. If we start seeing it go sideways, then what I'll do is I'll take that trading range, I'll copy and paste it down. That'll create support down here, right? I'll find that level of support, and then we'll look for that one, two try failure pattern. Look for the proper entry signal, and we'll look to buy off of, again, below the low of the range. And boy, oh boy, would it be nice if we could use that trend line as well. So as the market goes higher, the big question I have right now is, does it pull back? Right? Do we get that one try, two try below the moving average into that hidden channel pullback? Or do we see it just go, really aggressive run? If that's the case, we're trying to look for traps, right? Bear traps below prior swings. Or do we run into a brick wall up here? Nobody wants to buy, right? We double it up, find that new range expansion level, try to combine that range expansion with that trend line, and all we're looking for is one try, two try, good signal candle, and up we go as we go higher. That's the plan, guys. As far as the bulls go, how does this market turn bearish? Strength, strength, and more strength. We saw how much this market collapsed here, right, middle to late this afternoon, and they couldn't hold that pullback. We're going to need to see them hold this pullback right now, which means we're going to have to see a strong move down, a pullback to the moving average, and then a strong move through. That's the only way I'm going to trust this move going lower. Now, if we do see that strength, pull back to the moving average and then blast off that moving average. Again, we call these 1, 2, 3 reversals, or if it was in a range here, 1, 2, 3 breakouts. If we do see that 1, 2, 3 reversal, and again, you can learn a lot more about these reversal patterns inside that free trading class, then I want to mark up that level as resistance. I'm going to mark up that as resistance, and now I know exactly where I want to be selling. I want to be selling off those highs for that next measured leg lower. So really a great opportunity here to get long on this S&P. I'm sure a lot of people are watching it right now. My big question is, do we pull back? Do we short covering rally? Either way, though, you guys are ready here for whatever we get. And don't forget, tomorrow morning, 8 o'clock Eastern time, we're going to do it all together. How about some Nasdaq here tonight? Nasdaq's bearish with a trading range, a support trend line, and a measured move on the chart this evening. The long-term momentum is bearish, but with price action rotating off the low of this trading range, you can easily see the short-term momentum, right, is now bullish, right, as we rotate off the low of that range. Now, I know I'm bullish now. I know I want to be a buyer. So what do I need? I need some levels of support, right, to combine with my entry patterns. So basically, looking to use the same basic plan as we had on the S&P, right? I've got that rising support trend line. That'll be a level of support. I have the low of this range. That will be a level of support, right? Prior swing, that's a level of support. I'll tell you what I don't want to do is I don't want to buy into this resistance, right? You can see resistance at the top of that range. You can see a following resistance trend line here. This is not going to be easy to buy as this market goes higher. So we really want to see a pullback, and ultimately that pullback back to whether it be the low of that range or at that rising support trend line, we can expect this to get below the moving average. Look for that one try, two try, right, off that trend line. Or if we really pull back a little bit deeper, one try, two try, right, failure pattern, and back up. So watch that two try. And again, it'll look very similar to what we saw here, right? It'll look scary at first, but once it pulls back to that moving average, watch for those sellers to fail, and then bam, we can buy the sucker going back up to retest that high. Now, that's the easy part, right? If we pull back, we're looking for those, right, that two try to buy off that low. How do we try to complete this pendulum swing? Because we know that we're trying to get up into that, right? We know that pendulum has swung, right, back and forth, right? It swung up, it swings down. We know that pendulum swings in play, and so as the pendulum swings from the low now back up to that high, we've got reason to believe that 7150 is on our radar. So how do we do this? Well, anytime I see a trend line like this, I always know I can use that now, right, for a pullback. So that's ultimately my plan here for tomorrow. And if you really want to do it the most solid and dependable way possible, you can incorporate this with a two try. Once, twice, and then buy, right? And then buy from there, right? Very similar here we saw earlier on in the session. Strong move up, buyers try once, buyers try twice, and then it collapses. So think of it the opposite direction now, right? We go up here, let those bears try once, let them try twice, and then using that trend line now as support, right? We got that one try, two try, make sure that moving average clears above that trend line, get the appropriate signal candle, right? And blast off we go up to, right, that 7150 to 7168 area where we'll find some more resistance. If we can get a real strong break higher from there, well, then we can draw a new channel off of these lows, We can use these levels, these prior resistance levels as support, and we can keep this party going on all day tomorrow if we can get enough strength breaking out of that trading range. Remember also too, guys, it's always a killer if we sit right in the middle of that range. One of the hardest parts of being a trader during range-bound markets is when the market is sitting there. It's very tempting to try to force trades. It's very tempting to go doing other things, checking emails, checking social media, hanging out on Twitter. But the most important thing you'll know about a range is when we're right in the middle and we're really quiet, it'll break out. It'll try to break out in almost an instant. So you really got to try your best to stay focused. And this is ultimately the big benefit of being with me every day in the trade room. I'm going to hold you accountable. I'll inspire you to follow those rules. And I'm going to lead by example by always staying focused, locked and loaded at being ready for every trade pattern, trade opportunity that we get. So now we've got a great plan of attack there for the Nasdaq. Again, if you want to learn more about these patterns, grab that free trading course. It's linked up in the description. It's also in the upper right-hand corner. Let's keep going. How about some gold now? Over to the easy stuff today, Gold is clearly bullish with a strong spike in channel into a short covering rally into a measured move. We talked about the likelihood of this short covering rally today, And I warned you it was going to be aggressive, If you were ready for that today, if you were mentally prepared for that today, you probably made a killing on this. The strength of this move higher is very, very important. That tells us the bullish momentum is so strong that any pullback below that moving average will most likely be seen as a buying opportunity tomorrow. I'm also watching to see if this market turns sideways into a trading range. Big strong move up. It looks like we may have some tops forming here. So I'm kind of watching to see here, if it starts going sideways as well. You'll see another example of this similar chart structure on the euro tonight. So stick around for that in a few moments. So now remember, I'm watching to see if it turns sideways into a range. Because remember, whenever we see this much strength in one direction, the following day is often a range because nobody wants to sell. It's too bearish, It's too bullish to sell. So the market will kind of sit there, and go sideways. So I'm definitely watching for double tops at these highs, and then we'll focus, on structuring out that range. So we know we're bullish. We know momentum is bullish. There is no question about that whatsoever. Do not think about trying to sell this market right now. The only selling I'd be doing with this market will be taking profit on your long positions. Really, the only question I have right now is, kind of what do we have next? What we know is we have a spike in channel. And spike in channels are notorious for deep pullbacks and then a retest of the high. The bottom line is the reason why spike in channels are notorious for deep pullbacks is because there aren't any deep pullbacks the whole entire day today. So we know that anything now that pulls back is likely going to be seen as a buying opportunity. And because the buyers are most likely already in this move, it's going to have to pull back a decent amount to really attract enough buyers. So we're bullish. And I'm looking for a level of support, I'm looking for support levels. The key support levels I can see for the spike in channel are going to be that 18.6 and that reversal line here at 14 even. Now, at the same time, I'm also watching for a possible range up here. You'll notice I've kind of speculated what that range may be from 29 to 24.4. Now, remember, anytime you have a range, first of all, think about a bias. We're bullish. That bullish bias tells us to buy below those lows, Don't sell, buy below the low. We can also take the size of that range, Copy and paste it down, And that creates those range expansion levels that we talked about earlier on oil, And the E-minis. So those expansion levels are critical levels of support, That 19.6 is an expansion support, That 33.7 is expansion resistance. So if we do start going sideways here tomorrow, then we want to shift our plan a little bit, not by much. We're still trying to buy. We're still trying to buy at support. But now, instead of looking for a trap pattern, trap back up, we like to look for that 2-try rule. And that 2-try rule would mean we wait for the price to go below the moving average, or below the range in this case. We wait for the market to pull back to that moving average. Then we look for the sellers to try one more time. Now, sometimes it's a very subtle second try before they fail. Sometimes it's a lot more dramatic, right? And I'll teach you different ways to use how the market responds to that moving average, because how the market responds to that moving average is a big, big deal, right? If it jumps off the moving average, it could turn bearish, right? If it jumps off that moving average, that's a bear market now. And if that happens, we'll look to, right, grab those levels of resistance, and we'll try to sell off that high, right, as we go lower. Typically, though, what's going to happen is you're going to see those sellers try, but then they'll slow down. They won't be able to really get that much juice going in the opposite direction. Once we see that, we're simply looking for that nice strong signal, and we'll buy going back up to retest that high. And then again, don't forget, right, we'll use that pendulum swing, the amount of the move lower, right, the amount of the move higher, and that will give us that final target, right, as we go higher. So that's the plan if we go sideways, right? If we start seeing this market rotating sideways here, whether it be a triangle or a trading range, 1 try, 2 try, right, and we're buying back up. Another opportunity here may be a flag, right? So again, we know we got the channel. We'd like to get that pullback, right, that pullback into a seller failure. This is very similar. We've talked about already a few times today, right? Seller failure into that, right? Into that hidden channel pullback. These are easy patterns. You'll see hundreds of examples of that little setup, right? That 2-try failure into that hidden channel pullback. You'll see hundreds of examples of that inside of our free trading course. But the bottom line, though, is if we turn into a flag, right? Flag patterns, strong move up, pull back, lower high. What happens is it will create a bear channel, right? It's a bull market with a bear channel. How do we trade this? We've got to get above it and use it, if I can draw that again there, right? And then use it as support. And this can be a little bit tricky, right? This can be a little bit tricky. The key is, if I kind of draw this up here right now, let's just kind of imagine for a second, right? This ends up pulling back here now. Right? We start seeing that thing channel out here right now. Here's the key. We want to make sure we let it pull back far enough so we're not buying right into that high, right? So you're going to give it some time here. You're going to want to combine it with some support levels, right? So these support levels down here. So you want to give it some time if we start seeing it flag out. Once we start getting down to this battle zone, then we can start looking for, right, that breakout pullback, right, and use the top of that channel, right, to buy nice and low. Remember, the market's bullish, right? We're not seeing that big collapse to turn bearish. So the goal is to buy at support. If I have that trend line coming down, it's falling resistance right now. I want to get up, use it as support, and then again, we'll still be able to use, right, that pendulum swing, that measured move. Measured move, of course, we have here 1, 2, if we pull back again, right, we'll use that same measured leg for our next target. So now we know, right, if it pulls back for us, right, pulls back sharply, 1 try, 2 try, back up. If we go sideways here, right, same thing, 2-try rule below that range, right? If we pull back in a flag, if we start flagging out here, get it nice and deep, make sure you get enough space, and then buy from there. And then again, don't forget, strength, move lower, pull back to the moving average, run off the moving average, 1, 2, 3, reversal, find that, right? Find that resistance, mark that resistance, and we're looking to sell it right up at resistance as we go. Be very careful tomorrow, forcing trades through those highs. What if the market does go higher, right? What if it keeps bleeding higher tomorrow? Then what? If it keeps bleeding higher tomorrow, it continues a spike in channel, and at that point now, we're going to keep our eyes out for a possible range, double tops, 1 try, 2 try as we go higher. You know, again, right now I'm kind of speculating this market's going to go range bound, but if we don't get that range, right, traps, right, trap patterns, buying that pullback. Same basic plan if it goes higher, right? We just got to wait for the price to pull back. I don't want to buy high. I want to buy low, and I want to buy at support. All right, let's keep going. Now, over to the euro. The euro is a little bit more of a clearer picture as far as this range goes. The euro is clearly bullish with what appears to be a double top, right? That double top today, anytime I have a bull market that double tops, right, or a bear market double bottoms, we look and call this a range. So it looks to me like we've got that range pretty much dead to rights right now in a bull market. So double top into a trading range. I have a measured move in the chart this evening as well. The bulls have the clear momentum going into the trading range. So we want to buy the low. I want to buy down below that low. I want to use that one try, two try, failure. And again, these patterns happen over and over again, right? Up we go, one try, two try, up. 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 I mean, I don't even know how I could find, there are 4 great examples, right, of two try failure patterns right below that moving average. You can easily see them. I'm not making this stuff up. So the bottom line is that I want to buy low, but the easiest way to make your money is to buy when those sellers feel like they've got something to sell, right? Because then you got everybody roped in. It's a nice deep pullback. So I want to see it go lower. I want those bears to be drooling over this, trying to reverse this trend. Okay, once I see them start to sell it again, then we know where stops are, and of course we're looking for that, right, that strong, right, signal to trigger the entry as we go higher. And again, at that point, right, the target will be back up to retest that high, and then whatever the pendulum swing is, right? So if we've got that trading range, if we pull all the way back here now that pendulum swings down, swings up, right, and that becomes our big target up around that big round number. So that's the plan, right? One try, two try, buy below those lows. If we sit in the middle here for a while, then we are sitting right along with them. We're going to wait for that price to break out, right? And then we'll look for that two try below that range. What if the market goes higher here? Then what do we do? What if this is just a little bit of a head fake? What if we go higher here? If we go higher here now I'm going to go out. I'm going to find, let's draw another color here real quick. If we go higher here, right, I'm going to find that as my channel high, that as my channel low, and I'm looking for buying opportunities off that, right, off that channel low. That's relatively easy, right? Another option would be, let's just say this thing just torches higher, right? Like we talk about on gold, right? What if this thing just runs, right? If it just runs into a spike, okay, then watch out for that spike in channel, right? Watch out for that spike in channel. One try, two try, back up. We're buying the low of that channel, right? So watch out for it to spike higher here. If it does spike higher here, we'll get aggressive with a spike in channel, etc., etc. Right now, it does look like we're range bound, right? So one try, two try, back up. If we do run hard here, right, find that new channel, right? We're buying that dip on the way higher, right? If we jump up and then pull back, we'll find that new channel and we'll look to buy, right, off of that low, and it will probably be, right, if we find that new spike in channel here, it'll probably end up being a similar two try failure and then back up, right? Two try failure into that hidden channel pullback for that rotation back higher again, right? Is the same basic patterns we've seen over and over today. There's no reason to think tomorrow will be any different. You know what a reversal looks like. 1, 2, 3 reversal. You know what a range plan is. We know what a channel plan is. We're looking great here for tomorrow morning session. Remember though, to be a successful trader, you need 3 things: strategy, skill sets, and mindset. Right? Strategy is pretty easy. We've gone over that tonight. Skill sets, that takes a little bit of effort on your part, right? Working your way, learning how to draw trend lines, channels, ranges, how to identify the entry patterns. That's okay. I'll teach you most of that inside of our free trading classes. And then it's all about mindset, right? I could give this trading strategy to 1,000 traders, and most of them would still find a way to mess it up. They would still buy high, they would still chase moves, they would still be subjected to greed and fear like every other warm-blooded mammal, right? Like every other human being that tries to be a trader, right? What really separates the rookies from professionals is, can you keep it together, right? When times get confusing, when times get exciting, can you buckle down, be disciplined, be patient to take only those A-plus trades? That's the reason why our trade room is such a critical part of a successful trading career. I include unlimited access to our trade room as part of our advanced classes. You can learn more about all the details on our website. Give me a call anytime you have any questions, right, using that toll-free number right next to my ugly mug. Grab the free trial for a free pass to attend our trade room and see more. And don't forget, we always have live support on the right-hand side of the website. Friday morning, get at it early tomorrow and get out of there, right? Remember, early in, early out on Fridays. Have had a great week so far. There's no reason to think tomorrow won't be another great day as well. I'll see you guys tomorrow, 8 o'clock Eastern time in the trade room. If not, same time, same place, next Monday evening, will be our next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here tomorrow. Adios, amigos. Bye-bye for now.